All right, in yesterday's video, I noted that we had gotten stopped out of our stock market position with a small profit, and I had noted this in one of my previous videos that I was going to put stops on gold at these two minor pivots. The first pivot came in at 1885, and then if you wanted to give your position a little bit more room to work, you could use this pivot here at 1877. Well, gold has broken both of those this morning, so stopped out of long positions in gold, and we're now back on the sidelines, waiting for what at this point anyway, I would assume that this is going to make a lower low, that this will turn out to be a second left translated daily cycle. We had one left translated cycle here, and it's looking at this point, it's looking like we're going to have a second left translated cycle before we get our final intermediate cycle low. So the assumption is that between now and probably the election, I would imagine most of these things will bottom either on the election or the next day, November 4th, probably in the morning, pre-market on in November 4th, kind of how it topped in 2016. So I think you want to make adjustments. If you're short anyway, you'd want to probably exit those positions on November 3rd and then just start looking for a long entry on a swing. But stops have been hit. The assumption now is that this pivot here is going to break. This cycle is going to left translate, and gold's probably going to come down and test this support zone here in the 1800 range. And it's possible, I guess. This doesn't really look like the kind of pattern that's going to produce a big bloodbath phase, but I guess it could. If gold breaks this 1850, it could trigger a lot of stops, and we could get a 5 to 7 day bloodbath phase that might last longer than just into November 4th. It could maybe go into the week, next week, or the beginning of the week after, and we could get just a serious selling panic, could take gold back down into that T1 pattern low here in the 1770-ish zone, this midpoint consolidation. All right, so I've outlined this. This is this midpoint consolidation of this, of what looks to me like anyway a T1 pattern, and this has been an exceptionally difficult and erratic move down. But at this point, it looks like the ECB has stopped, at least for now anyway, the rally in the euro, and that's of course pushing the dollar up, and that's putting pressure on everything. It stopped us out of our stock market position yesterday, and we're getting stopped out of any long positions in gold this morning. And the assumption, like I said, is that this will break, this cycle will left translate, and then gold will come down and possibly test this consolidation zone in here somewhere between 1800 and maybe 1700. I kind of doubt it's going to come all the way back down to 1670. I think the 50% Fibonacci is at about 1770. Let me check that. Yeah, that is correct. The 50% Fibonacci retracement, it comes in at 1770. So, just enough to test this midpoint consolidation zone. That's the point at which I would start looking for some signs of a bottom. If we're, getting pretty late in the daily cycle and we get a swing, then that's where I would try and pick a bottom. And also, if sentiment had become quite bearish at that time, then that's where I would want to become a contrarian and be a buyer. We are still in a bull market. We're just trying to erase this enthusiasm that had been generated in this monster rally here. And as always happens, we get the early buyers here. We didn't bite on that one, obviously. We got another leg down. When this did break the intermediate trend line, I did take a shot at it. But it looks like that was going to be premature, so we're stopped out here, and then we'll take another shot, presumably when this support here breaks, and maybe we can get down into this consolidation zone, or at least down to this $1,800 support zone. and then we'll look for another bottom. And at that time, most everybody will have become convinced that the bull market in metals is over, and they will be too afraid to pull the trigger. Whereas here, they were, everybody was afraid of missing out on the next rally. Well, we're starting to wipe that out, and if we go below this, then that fear of missing out is going to be completely eradicated, and at that point, everybody will be afraid of further downside, and then that's the sentiment we want to look for our next buy, because this is still a bull market. Bull markets make higher highs. I think the next intermediate cycle, gold is probably going to go to, I don't think 2,500 or even 3,000 is completely out of the question during the next intermediate cycle. But in real time, traders are not going to be able to envision a scenario where gold bottoms and then rallies back up to 2,500 or 3,000, and so they will not be able to pull the trigger when the time is right to re-enter long positions. But I think the next intermediate rally is going to be a doozy. So there's a contrarian trade is brewing, but we're not there yet. I think we have to break this low and probably at least come down to 1,800, maybe a little deeper before we get our final intermediate cycle low.